Yo, what's going on, boys? And in today's video, I'm going to be teaching you guys how to trade in poor market conditions. While tons of people were losing during March and blowing their accounts, I actually had my most profitable month of the year, netting $20,000 across prop firms. I also had a student hit a 10K month. And so if you want to work with me one-on-one, you can book a call with the first link in the description. As well as if you want help with your trading, you can send me a DM. My Instagram is also in the description. And without further ado, let's get right into the video. So I'm going to break this video into two different sections. Number one is how to identify if we are in poor market conditions, and then number two is actually how to trade them. Starting off, by the way, I made a nice presentation for you guys. Identifying poor market conditions, right? That is very important, and it comes down to three things, right? Are we trending? Does the higher time frame look good? And are we actually expanding, or are we more consolidating? And so the first one, are we trending? Now, I don't usually have a bias when I am trading. However, I can usually determine which direction we are going based on how we are looking pre-market. But if I can't do that, then there is no clear bias and no clear direction on where the market wants to go. We are constantly reversing, again, not expanding. We have weak structure, so higher highs and higher lows are not being respected, as well as lower lows and lower highs, and indecisive wicks. These are all clear signs that we are not in a trend. And what does that look like? Well, I have TradingView pulled up here, and this is exactly what that looks like. Now, of course, I am on the 1 minute, but when you can clearly mark out the high and low of a range, and we are trading with inside of it, then you can clearly see that we are not expanding in the market. Now, the reason that March was hard for a lot of people is, again, we were in that hard time frame range. And if you actually take a look at it, this was March's price action. Very choppy, very indecisive. We have wicks going in either direction. There is absolutely no expansion in here. If the hard time frame is in a range, like I just showed, draws and liquidity are less obvious. This is a very good and easy sign to see whether or not we are in probable trading conditions or not. Is if the draw and liquidity is not obvious, then I'm not going to take a trade. Like if I can't confidently look at a chart and say, okay, this is our target for upside, and if we potentially fall lower and it sets up, this is our target for downside. If I can't do that, then obviously I'm just looking at something that's going to be very low probability. And patterns being disrespected, that's again, you know, the higher low, higher low, higher low, you know, patterns being disrespected, lower highs, like nothing's really holding. And rather than expanding, we're more just consolidating. Here's a picture to represent some ugly looking wicks. And again, we are consolidating, more so moving sideways. Expansion is either up or down, and consolidation is moving sideways. Another example, we are clearly moving sideways, not expanding. Now in this example, we are very obviously expanding to the downside. So lower volume. Again, guys, to expand in the market and to trade continuations, we want volume. Chop, again, what I've showed you, these are two great examples of chop. Equal highs, equal lows, and again, no expansion. These are all great signs of poor market conditions that are very easy to identify simply just looking at the higher time frame. And now it is time to actually show you guys how we are going to approach trading these poor market conditions, because again, I just had my most profitable month of the year. I made $20,000 across prop firms, $10,000 payout with Top Step, and then a $10,000 payout with Lucid. So let's get right into it. The first thing right away is to reduce your trading frequency. This is a screenshot from my spreadsheet of March. I took one loss and I took very few trades. There was not a single week where I took more than 2 trades. And as you can see, some weeks I only took 1 trade. But the best thing that you can do is, number one, wait for more confirmation and reduce your frequency. That also means not trading every single session. As you can see, this is how my spreadsheet looked in January, and I was getting trades almost every single day, but I was also trading Asia session and London session on top of this. But in poor market conditions, I'm not going to be looking for a trade in other sessions because again, we are trying to reduce our frequency and take less trades. Another thing is extra confirmation. And this is something that I do regardless, okay? So, and that can be done simply by just waiting for more candle closures, waiting for the next candle to open to really make sure that we are continuing in the same direction we were displacing with, and waiting that extra second to enter is not always a bad thing. And your trades need to have high conviction. And I'm going to talk about that on the capitalized section. By the way, this is broken down into 3 sections as well. Frequency and pickiness kind of go hand in hand, but capitalize is the big one, which I want you guys to stick around for. And being picky comes with waiting for clean displacement and clean market structure. You want to avoid those choppy days. Again, when we see this, this is a clear sign to get off and not even consider anything. If we're trading like this within the first hour of market open, I'm going to be off, even the first half hour of market open. But if we're getting clean displacement, we have gaps and imbalances that are holding, being respected, and there is a clear target, a clear draw on liquidity that needs to get taken out, then I am going to capitalize. And this is where sizing comes into play. For me in March, and the reason it was my most profitable month of the year so far, because yes, while I obviously took less trades, I sized up due to the lack of frequency. So in January, when I was taking like 3 to 4 trades to 5 trades even a week, I was risking like $500 to $750 per trade. But in poor market conditions where there's low frequency, I'm actually sizing up. Now, this sounds a bit counterintuitive, but again, we're trading on prop firms. And so the best thing to do when you're trading low frequency, like we usually are in poor market conditions. So in March, I was risking around $1,000 almost every single trade. Top of that, I was also going break even a lot quicker, and I was having bigger, more protected stop losses. So while yes, I was being a lot more conservative with the actual trades I was taking, I was capitalizing on those A++++ trades, and I absolutely banked because of it. This was one of the trades that I wanted to go over. This is absolutely A+. I was not missing this for my life. As you can see, clear displacement towards our drawn liquidity, confirming that we're going to continue lower. All of this low resistance liquidity is getting taken out. You get a retracement of lower volume into this massive 1 minute gap, and it holds. Placement out. I wait for a push lower to confirm that we're actually continuing in that direction. Break even at the internal low, and we end up delivering straight to take profit. This was another trade that I took in March. I took this one based off the 5 minute closure, but as you can see, all of this low resistance liquidity is getting taken out after we manipulated higher off the open. What ends up happening, we end up delivering, break even once I get delivery through my entry, and straight to take profit. So on days like this, where price action is very indecisive, stay hands off. Now, when the market is doing something like this is where you want to capitalize. Unfortunately, this day, Top Step was actually freezing and I wasn't able to take a trade. On a day like this, look what is happening. Yes, we are obviously going higher, but there's no clean displacement and we're just slowly grinding higher. Wicks in every direction, nothing is very certain. So yes, guys, while it is easy to take the winning trades, it's about staying out of the losing ones that will actually keep you profitable longer term. And a lot of people actually had a losing month in the month of March, but I actually had a student have his first $10,000 month. He absolutely banked, and it was simply just about waiting for those A+ setups, again, sizing up and taking advantage when they present themselves. But anyways, guys, I appreciate you for watching this video to the end. If you want the link to this Miro board, I have a link down in the description to my free Discord where you will find it. And again, send me a DM on Instagram if you guys want help with your trading. And if you want to work with me one-on-one, you can book a call to see if it's the right fit in the top link in the description. Also, make sure you guys subscribe. We're so close to 1K. And anyways, guys, I appreciate you for watching once again, and see you guys in the next video.